All right, let's dive right in. Today, we're taking a close look at the medical services group HC Surgical Specialists. They've just dropped their latest financial results for the first half of their fiscal year 2026, and trust me, the numbers tell a really interesting story. So let's unpack it together.
So the first thing that just pops right off the page is this number, 11.7%. That is a big deal. It's how much their profit shot up compared to this time last year. For any investor, seeing a double-digit jump like that, well, it definitely gets your attention. But as we're about to see, there's a lot more to the story than just this one number.
So here's our game plan. First, we'll talk about that headline number, the big profit jump. Then, we're going to go behind the curtain and see what's really making that number tick. After that, we'll do a health check on the company's balance sheet. And to wrap it all up, we'll look ahead. What are the risks and the rewards on the horizon?
Okay, so let's start with the big news. As we said, profit is up, hitting a nice $4.05 million for the half year. But how they actually got there, well, that's where things get really fascinating. And here is our first little puzzle. Take a look at the left. You can see their revenue. That's the money they make from their actual day-to-day medical services. It was actually down a bit, by 1.6%. So, wait a minute. If they brought in less money from their core business, how on earth did their profit jump by almost 12%? That is the million-dollar question we need to answer.
To solve that little mystery, we have to look past the top-line revenue number. We need to pop the hood and dig deep into the income statement. This is where we're going to find the real clues that explain that impressive bottom-line growth.
And boom, here it is. This is the answer. You could see revenue pretty flat, right? We already knew that. But look at that second line, the fair value gain. Whoa. It went from just $129,000 last year to over $900,000 this year. And on top of that, see those two big losses from last year? A loss on derivatives and a loss on an associate company? Well, they're just gone this year. So the key takeaway is huge. The profit growth came from their investments, not from seeing more patients.
So what in the world is a fair value gain? Well, think of it like your own personal stock portfolio. Let's say you own some shares and their price goes up. On paper, you're richer, right? Your net worth has increased, even though you haven't actually sold the stock and put cash in your pocket. It's the exact same idea for a company. HC Surgical holds investments in other companies. Their value went up, and that paper profit gets added to their bottom line.
So to just put a bow on this part, the profit jump really boils down to three things: a big gain on investments, and then not having two big one-off costs that they had last year. So the story here isn't about business growth. It's about smart financial management and a bit of a market tailwind. Okay, so we've cracked the profit puzzle, but a company's health isn't just about one good period of profit. Smart investors always check the company's foundation, and for that, we turn to the balance sheet. It's like a financial snapshot of the company's overall health. And you know what? The signs here are looking really positive. What you're seeing is the net asset value per share. Basically, it's what the company is worth on paper for each share, and it's grown from about 13.5 cents to over 15 cents in just 6 months. That's a really solid increase and a great sign for shareholders.
And if we dig just a little deeper, the good news keeps on coming. Total assets, that's all the stuff the company owns. They're up. Total liabilities, that's what they owe, they're down. And maybe most importantly, their cash in the bank has swelled by almost $1 million to a very healthy $6.0 million. So fundamentally, the company is standing on much stronger financial ground than it was just 6 months ago.
Okay, so the numbers from the past 6 months look pretty good. The foundation is solid, but as every investor knows, you're not buying the past, you're buying the future. So what's coming down the pipe for HD Surgical Specialists? What could help them or hurt them going forward?
In their outlook, the company talks about a pretty big change coming to Singapore's healthcare insurance world. This is their official word on it. They're talking about new rules for something called IP riders, which are a super common type of private health insurance. As you can see, they're saying, hey, we don't think this will be a big deal right away.
So what are these changes? In simple terms, starting in April 2026, patients are going to have to pay a little more out of their own pocket for some procedures. And for a company like HSC Surgical, which gets a lot of business from insured patients, any change in how people pay for healthcare, well, that's a trend you've got to watch like a hawk. And all of this leaves us with one final, absolutely crucial question. We've seen a report with strong profit, but we know it was supercharged by investment gains, not by more people coming through their clinic doors. So, looking ahead, with the healthcare landscape itself changing,
Can the company figure out how to grow its core medical business? That is the central question for anyone watching HSC Surgical Specialist from here on out.